Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 8th of August opening the week video. On this video, we will just cover some news first and then we will just go ahead with our charts. So I will start with last Friday non-farm payroll report. So as you may know, the expectation was only just half of the reported number. Everybody was expecting, all the investors was expecting 250,000 new hiring from US government and lucky corporates, but it was released as reported as 528,000. So this is double amount of that expectation. It's more than 500,000 people got new jobs in the US. So with these latest news, we have received the same level of employment before COVID. Its pre-COVID levels has been reached with the latest job report. So important side of this one, we can just see that a strong labor market as Biden administration and Fed officials said, a strong market is happening. But how about the inflation? So they say that we will just expect a strong labor market, there is no recession, and at the same time they are expecting lower inflation. To lower the inflation, they are raising the interest rates. Is it helping? Is not helping? We will see that on this Wednesday. If we just see lower than expectation right now is 8.8%. If you just see lower than 8.8%, it's good for markets, especially for stock markets. People just will say that, all right, the Fed interest rate hike has worked, and then inflation is coming down, oil prices are coming down. So we can just say that pivot of Fed interest rate hike has been reached. There will be a less interest rate hike. Maybe like Fed will start cutting the interest rate in the next year. But if it doesn't happen, if we just see like 9%, even higher than the previous month, then the trouble starts and everybody will just start to expect another 75 base point, even 1% interest rate hike in September. That may just make the dollar index a higher level. As you can see here, let's start with our chart. As you can see here, from the mid of July, we are just the dollar index on decline, and it has tested 4 points lower than this level. And then from this level at the beginning of August, it just made another rise and then rejected from this level. And with strong economy, with strong labor market report, we have seen the same level trial. So but still we are close that level. So on Wednesday, if we just see positive report, lower inflation, that's good for the next coming days. We can see declining dollar index. But if we don't see that, but if we see a higher inflation, we will definitely see 108 109 levels in dollar index, with the expectation of more rate hikes by the Fed. Let's look at our second chart.
You are ready to win with us. GAN Markets.
All right, as you can see here, oil prices are on decline. Let me just show you what are these blue arrows. As you can see here, this level has been a good support of this one. It's $93 level, a $92 level, and when it just reached the price reached this price, it just rebounded every time. But this time as well, I have just reminded that the channel is getting narrower, and then if it doesn't work, we will see lower levels. So this didn't work, and then we have seen more decline. Right now we are in a new channel. What is this channel? It's, as you can see here, first 85, then $79 channel. So in here, as you can see on the fab, it was trading and then just struggling on this 85 level, and here, and then it tested $90. Then all this Russia and Ukraine started. So the positions just change. Right now, instead of European buyers, Indian and Russian buyers are just buying from Russia, and then the other sellers are selling to Europe. So the balance is almost just set out in the prices in supply and demand side, and also a recession expectation is just keeping the price lower. So as you can see, a channel is just evolving, and in the coming days, if we just see lower level of inflation, we will definitely see lower level of oil prices, and it will be good for markets. But another important thing, let me just show you one thing. I will just make it this one, and that's the important thing for evaluation of markets. As you can see here, in August it was 63, and right now we are in August and it's closer to 90, so 30% already higher. But after August, in September and October, it started to rise, so it get closer to $70. So if we just see this decline happen, if we just the same level with the previous year, then it will be good for inflation side. That's the most important thing in the coming months. Energy side, inflation can be in negative side, even if we just see lower than these levels like this in the starting of the next year, we can just expect because like the base effect will just work. And just imagine like this, in the July it was $90, and then the next year it will be $70, so $20 less than the previous year. We can see sharp declining, deflating in energy prices. So that's the reason of showing this. Base effect can work if this decline in oil prices, but for short term there is a channel, declining channel, and everything is working on this channel. Let's look at gold price. All right, the risk, when we see risk in the market, the price of gold is rising. So on the recent days, it was declining, but then it just like it started to rise again because people are just assessing more risk in the market, especially in these China and US escalation about Taiwan speeches after Pelosi's visit. So many people started to evaluate the higher levels of gold. If we see a little, even like just a little attack on Taiwan, so definitely we can expect to see like a $2,000 levels in gold prices again and again. So let me just show you once more. This level of the gold has been seen in the first March, in the last month of like in the previous months. Everybody was talking about exercises of Russian soldiers on the border of Ukraine. So they have just like put buy options on like that. And then right now, people started to assess, investors started to assess and exercises like on Taiwan Strait. So they are just buying gold. If we just see some real threats by China, then we will definitely see $2,000 levels again. But if it doesn't happen, with the rise in interest rates, it will definitely test these low levels. Thank you so much for watching us. We will be together on more news. We will cover more charts with you. Have a nice day. Bye.